and I want to talk naked trading. If at any point you think, hey, this is pretty cool, I want to learn more, you can go to nakedtradingclass.com, the link below or above this video, nakedtradingclass.com, and learn 3 ways for building an account quickly. And probably one of those is going to be really interesting to you, which is cool. I hope you use it. And if you like it, you might even join us as we build up a small account rather quickly in our Small Account Big Profits course. But all that information is at nakedtradingclass.com. That's where you can learn how to build up your account. So let's talk about a couple of different ways. Hello, Edwin. Glad to have you here. A couple of different ways that you can actually take one trade system and kind of multiply it and diversify it. We're doing this in the Small Accounts Big Profits course. Let me share with you what this looks like. Good day, Limitless. Nice mic, sounds great. Yeah, thanks a lot. I love this mic. It's my podcasting mic. If you haven't been to Truth About FX, truthaboutfx.com or Two Traders podcast, I'm always using this mic right here because it's a beauty. All right, let me share with you how this works, guys, because this is cool stuff. This is how I like to diversify. Now, if you're in Small Accounts Big Profits, you know all about this, but I'm going to share with you how this works. Essentially, what I like to do is take a trade idea and split it up and fragment it into several different positions. And the reason why is because I'll get diversification, and I'll show you one example here. Now, not all trades are going to be this rosy, but this was a sell up here at 74.35 with a stop loss at 74.90. Okay, that's what this trade. So that what is that? That's 60 or whatever that is. 55 pips of risk. 55 pips of risk on the New Zealand yen 12-hour chart. Now, by using several different exits, I got the parabolic stop and reverse on here, and I've got this moving average, which is a 6 exponential moving average. And then I also have a target, which is 3 times my risk down here at 72.70. So that's what we call 3R target. Now, what happens when I take this trade is I take 3 of them. One of them will use this moving average to get out, and I'll share with you how that looks in just a moment. One of them will either hit the stop loss or it will hit the target. And then one of them will get stopped out by the parabolic stop and reverse. Now, what's happened is the first 2 were stopped out, and the parabolic stop and reverse, which is the stop loss, is currently 3 pips above this dot right here. So it'd be at 72.15. That's where my stop loss would be. And the price is currently at 71.42. So whatever that is, that's like 80 pips away from the current price. That's where the stop loss is. So it's a pretty loose stop loss as stop losses go on the 12-hour chart. Anyway, but this is what happened to the first trade. The first trade actually had a very, very small winner because I sold at 74.35, and then I waited for the moving average slope to change. If you look at this moving average, you'll see that it's yellow and it's green. The reason why it went green is because it started sloping upward, and because I was in a sell trade, I said, all right, I'm out. And this was a terrible, like super small, like 7 pip winner or something like that. So there you go. There you go. And that's what this moving average will do. It will give you very small losers and typically small winners. Okay, if you use the moving average slope exit. Now, the 3R target will give you some winners and lots of losers because not all the time will the market go 3 times your risk. It's only usually during a nice move, like a trend or an explosion breakout sort of thing, which is why I try and trade those. So there you have the 3R target there. That was easily achieved. And then now we're just waiting to see what's going to happen here. So if you think about it, these 3 different trades are completely different. This trade made 3 times the risk. This trade made like nothing, maybe like 1/20th of the risk or less, maybe 1/30th of the risk. And then this trade right here, who knows what it's going to make, but it's probably, well, it is. We do know it's going to make more than 3R at this stage because the stop loss is at 72.21. Sorry, 72.15. So it's definitely lower than 72.70 target. So that's how you can diversify by taking one trade idea and changing it up by looking at all different types of exits. I find this to be very useful. I love doing this. A lot of traders will rail against this. I think that Having a tight trailing exit is great because if it's a losing trade, that will often save you. Having a loose trailing exit is great because if it's really going to run, you're going to bag it. And having a 3R target is just good math. I can take 3R targets all day long, and as long as I'm making 26% of my trades are profitable, I'm making money. So, you know, there are lots of reasons why we would do this. Psychologically, it can be difficult, but in the end, one of them is always going to be the right decision. So that's why I like doing this. I hope that this helps. That's called the moving average alert or something. You can Google it, Edwin, moving average slope alert. If you want more information on how you can grow an account quickly, these are just a couple of different methods. Go to nakedtradingclass.com. You'll get more information about how to do that. It's a free on-demand class. Just go there, load the video, and it'll be up and running. Yes, it is almost winter here in Sydney, but we wouldn't know it. Thanks a lot, guys, for spending time here. Really appreciate it. Hope that you enjoy the class, and I'll catch you in another video. Take care. Bye.